Do you ever get the feeling that you're completely glued to your charts? You're frightened to miss every move, every single pip of movement. You're glued there all day long. You just can't escape your charts. If that sounds like you, let me share more details with you right now. Hi everybody, it's Andrew Mitchem here, the Forex Trading Coach. Welcome along to my latest video and podcast. Today is Friday, the 14th of March. And I want to talk about trading less, because trading less is actually trading more. So what I mean by that is most people find that in order to make money through trading, they feel like they have to trade more and more, have to scalp the market, making lots of little trades, making pips here and there. Well, I think that that's actually the wrong way to trade. And the way that I trade and the way that I have more time than most other traders and actually enjoy life as well, is that I trade the longer time frame charts. And I want to share some examples with you right now. You see, I've taken trades on the monthly charts, the weekly charts, the daily charts, the 4-hourly charts, and the shortest time frame that I normally go to, unless I'm trading live in front of my clients on our webinars, is the 1-hour charts. But that's generally only during the European session. So the majority of my trades will be weekly charts and then daily charts and 4-hourly charts. The great thing with that is it means I can plan around my trading. If I'm trading weekly chart, it means that just once a week on a Monday morning, I need to look at my charts. If it's a daily chart that I'm looking at taking a trade from, just once a day at 5 p.m. New York time, I look at my charts. If it's a 4-hourly chart, I look at different times throughout the day on the close, the completion of the 4-hour chart. So it's really important that if that's the way you're looking at trade, that you choose a broker who has a 5 p.m. Eastern Standard Time, that's New York time, start of day. Really important that you do that. When you look on the daily charts, they'll have 5 full, complete day candles. Some brokers have 6 and they have what I call a small Sunday candle. If your broker has that, it's probably a good idea to change brokers and go to a broker who starts their day at the correct time, which is 5 p.m. New York time. So the start of the week is actually Sunday in New York, 5 p.m. And that doesn't change throughout the whole year, regardless of what the clocks do in your local time. 5 p.m. New York time is always the start of each new trading day. So make sure you have that on your charts. Now for some examples. I took a trade 2 weeks ago on the New Zealand dollar against the US dollar on the weekly charts. It's hit profit yesterday. It's made a great 165 pip profit, the biggest drawdown that the trade had at any time from its open was only 17 pips. It had a bigger stop loss than 17 pips, but from when the trade got filled, it only went negative by 17 pips and it closed for 165 pips yesterday. It meant I put the trade on 2 weeks ago. It took me probably 30 seconds to choose to take that trade and to place it. I did nothing with it. I left it open over the weekend because it was a weekly chart trade and it was still looking strong. It's now closed. It took 9 days, 9 trading days, but that's fine. It didn't take any more effort on my behalf. It still made a great return. And interestingly, that yesterday the New Zealand official cash rate was lifted by 0.25 points. It's now up to 2.75%, which is one of the highest interest rates in the developed world. Yet 2 weeks ago I could see that coming on the weekly charts, and all of this week on the daily charts I've been calling for buy positions looking at a very strong New Zealand dollar. In fact, I've mentioned it on many of these podcasts over the last few months. New Zealand dollar is looking very strong. And then we see the news come in line with where the charts are telling us, and we had an interest rate rise in the Kiwi dollar yesterday. I also want to tell you about a trade that I took on the weekly charts, again on the euro US dollar. It's now 183 pips up, and it's just hit full profit. It had a stop loss of 57 pips. It's a 3.2 to 1 risk to reward trade. So if I was risking, let's say 1% of my account on that trade, that made 3.2% return on my account just from that one trade. You see, I'm not paying my broker lots of multiple entry fees, lots of spread costs. It's just one spread cost. And it's on the weekly charts. Little stress, little effort on my behalf, great trade, good return. Take that out even further, and I have a trade on the US Swiss franc on a monthly chart. Now that trade right now, just before I started recording this video and podcast, that trade's up 145 pips, yet the biggest drawdown from its entry point is only 4 pips. So you can see that's just a fantastic trade on the monthly chart. I'm just going to keep an eye on that in a few weeks' time at the end of the month and just assess what it's looking like. More than likely by that time it would have hit full profit anyway. So it's really important from your trading that you enjoy your trading, you have time to do other things, you actually don't annoy your family because you're constantly glued to your computer and to your screen. You know, that's no fun for anybody at all, least of all your family. So my advice is, if you don't like the shorter time frame charts, if you don't suit those, if they don't suit your personality, go to those longer time frame charts. There's nothing wrong with scalping the 1, 5, 15-minute charts, nothing wrong with that at all, apart from you'd probably find that the majority of people are actually suited to the longer time frame charts. Also, don't be worried about the number of pips you need as a stop loss. You see, a lot of people get quite concerned that I can't take that trade because it's got a 100 pip stop loss, for example. It doesn't matter. Use my lot size calculator. Make sure that every trade has an equal risk percentage of your account. Forget the number of pips you're risking. Forget the number of pips really that you're making. It doesn't matter. It's the risk to reward of the trade that matters. And that goes across any time frame chart. It really doesn't matter whether you're trading a 1-minute chart or a 1-month chart. So I hope you found that really useful. If you don't have my lot size calculator, make sure you get a copy. It's free to use on your MT4 charts. You can get it free on my website. That's all for now. This is Andrew Mitchem from the Forex Trading Coach. Have a great weekend. Look forward to talking to you this time next week.